From buying his first stock when he was 11 years old to becoming one of the richest men in the world by the age of 77, Warren Buffett is a prolific investor with a history of home runs. Therefore, it makes complete sense that if you want to succeed in the world of investing, you should look no further than the man himself when looking for someone to follow. But what stocks does Warren Buffett invest in, and for what reasons? Make sure to stick around until the end for these answers and more, because you won't believe how a bath led to one of his most profitable deals, and the secret reason he invests so much in Coca-Cola. Subscribe to Free Investing and enjoy this deep dive into Warren Buffett's 2023 portfolio. Buffett Online reports that Berkshire Hathaway's stock portfolio is valued at $300 billion and is made up of 49 different stock positions. The source of this information is the quarterly reports submitted by the company to the Securities and Exchange Commission, otherwise known as the SEC. No doubt this is an impressive figure, but it should be noted that despite being the chairman and CEO of Berkshire Hathaway, Buffett only owns 16% of the equity in personal holdings. Therefore, although most decisions are made by Buffett himself, the numbers being presented here are for Berkshire Hathaway and not Buffett individually. Now that we've got that cleared up, let's get straight into the largest holding of Berkshire Hathaway. Take a guess in the comment section below and let us know if you were correct. It should come as no surprise to those who've been following Buffett's portfolio that Apple comprises the largest portion. Currently, as of the time of this video, Apple makes up a staggering 38.9% of Berkshire Hathaway's investment portfolio. This percentage comes to 895 million shares of Apple, which, considering a price of $160.77, equates to a total market value of almost $144 billion. So why does Buffett have such a strong affinity for Apple? Well, Apple's iconic brand and innovation leadership, particularly with the iPhone, have led to its 27.63% market dominance among premium smartphones. Additionally, the company's service business just hit a record revenue of $20.77 billion in quarter one of 2023 and now accounts for over 20% of total sales with expanding margins. That said, although Apple dominates a significant portion of Berkshire Hathaway's portfolio, it is not necessarily the most lucrative. As you'll discover in this video, there are several other positions that have played a critical role in Buffett's success over the years, not just financially, but also strategically. Next on the list is Bank of America, which comes in second place with 11.19% of Berkshire Hathaway's investment portfolio, a significant drop from Apple's 38.9%. This equals a total of 1,010,100,606 shares, which results in a market value of approximately $29 billion. During the debt ceiling crisis in 2011, Buffett made an initial investment of about $5 billion in Bank of America, which turned out to be one of his most profitable deals to date. But guess what? He made this decision while in the bathtub, which is an unusual place for investment decisions, right? Buffett got in touch with Brian Moynihan, the CEO of Bank of America at the time, and they agreed that Berkshire Hathaway would invest $5 billion in cash in return for $5 billion worth of preferred shares. Additionally, Berkshire received stock warrants, allowing it to purchase 700 million common shares of the bank at $7.14 per share, which could be exercised over the next decade. Chevron comes in at third place, just behind Bank of America, with 9.78% of Berkshire Hathaway's investment portfolio. Berkshire holds a total of 162,975,771 Chevron shares, which, based on a price of $160.86, adds up to a market value of more than $26 billion. Berkshire Hathaway invested a surprising $25 billion in Chevron back in 2022. Energy stock specialist Josh Young speculated that Buffett's bullish outlook on energy prices, which have surged due to the Ukraine crisis, likely influenced his decision. Additionally, Buffett probably identified both companies as undervalued with strong management teams. Furthermore, Berkshire Hathaway's investment in Chevron can be attributed to several factors, one of which is the company's reputation as one of the best-run mega-cap integrated producers. As per Buffett's longtime partner, Charlie Munger, Chevron is an excellent company, and the duo tends to invest in businesses that have high-quality management with integrity and talent. Moreover, Chevron's focus on sustainability and environmental initiatives aligns with Berkshire Hathaway's values. But while these stocks are crucial for the success of Berkshire Hathaway, they are overshadowed by Buffett's personal interest in the next stock on our list, which is none other than Coca-Cola. Berkshire Hathaway's relationship with Coca-Cola has been highly successful. Since 1998, Berkshire Hathaway bought shares in the company more than 10 times and sold over 8 times for significant profits. Currently, Berkshire Hathaway still owns 400 million shares of Coca-Cola, accounting for 8.5% of its investment portfolio and 9.5% of Coca-Cola's outstanding stock. At a price of $61.86 per share, this translates to a market value of another $24.7 billion. In 1988, Buffett bought over $1 billion in shares of Coca-Cola, making it the largest position in Berkshire Hathaway's portfolio at the time. The purchase marked a significant shift in Buffett's investing philosophy towards buying wonderful companies at good prices rather than buying fair companies at a huge discount. The latter was a so-called cigar butt approach to investing that Warren learned from Ben Graham in the early days of his career. The latter, Coca-Cola's market advantages and potential for recovery after the 1987 market crash, made it an attractive investment opportunity for Buffett. Today, Coca-Cola is still one of Berkshire Hathaway's top holdings, accounting for 9.2% of the company's stake and worth over $22 billion. Aside from the business potential, there's another reason why Buffett invests in Coca-Cola. He drinks 5 cans of it every day. During a 2015 interview with Fortune, he revealed that at least 25% of his body is made up of Coca-Cola. It's no wonder he invests so heavily in the company. He's practically made of the stuff.
I like to teach the world to sing in perfect harmony. I like to buy the world a Coke and keep it company.
In 5th place of Berkshire Hathaway's investment portfolio, we find American Express, a company that has achieved financial success through its strong presence in the lucrative credit card industry. It's worth noting that although this stock represents a small percentage, its impact on Buffett's investment portfolio is unprecedented, as you will see soon. Berkshire Hathaway holds 151,610,700 shares of American Express, which accounts for 7.49% of their investment portfolio, and based on a stock price of $163.59, the market value of these shares is approximately $24.8 billion. Buffett's investment in American Express in 1964 forever changed his views on investing. The investment was a genius move for 4 reasons. First, Amex had a solid competitive advantage with its business model and famous branding, which created a loyal customer base. Second, Buffett bought American Express during a scandal, and his instincts to invest in a great company paid off as the stock price gradually increased. For those unaware of what happened, in 1963, a commodities trader named Tino De Angelis used his inventories of commodities to attract loans from Wall Street banks. But it was later discovered that the barrels he was shipping mostly contained water. Despite this, Buffett saw an opportunity and invested in American Express. The company's stock gradually increased after the scandal subsided, making Buffett and his investors millions. Lastly, American Express influenced his other genius investments, including Wells Fargo, M&T Bank, Goldman Sachs, Coca-Cola, and Apple. Buffett's investment style after 1964 focused on buying stocks when nobody else wants to and investing in companies with good branding and capable management. The best investments come from great companies in hot waters with the market, and American Express helped him realize that. Charlie Munger's advice was right, and he could apply it to any great company in the stock market. Such is the way wealth distribution. Pareto's law states that a large proportion of a result often comes from a small percentage of its efforts, and Berkshire Hathaway is no exception. Those who have been following closely will realize that an astonishing 75.87% of Berkshire Hathaway's stock portfolio comes from just 10% of the stocks in which he has invested. So, what other stocks has Berkshire Hathaway invested in? The next 4 in order are Kraft Heinz, Occidental Petroleum, Moody's Corporation, and Activision Blizzard. Together, they make up 12.17% of Berkshire Hathaway's total portfolio, which is a combined market value of $36.4 billion. This means that only 18% of Berkshire Hathaway's total stocks hold 88% of their investment portfolio. The other 12% of Berkshire Hathaway's portfolio, consisting of approximately 40 stocks, can vary in market value depending on the daily price of individual stocks. These stocks are spread across a diverse range of industries, including, but not limited to, Hewlett-Packard, Visa, General Motors, Paramount, and Johnson & Johnson, with a total market value of another 30-some billion. Furthermore, according to Berkshire Hathaway's annual report for 2022, the company holds over $125 billion in cash and cash equivalents, including $92.7 billion in U.S. Treasury bills. For those unaware, a Treasury bill is a short-term debt instrument issued by the United States government to raise funds. Simply put, Berkshire Hathaway has lent money to the American government in exchange for an interest rate that can range between 1% and 4%, depending on the length of the term, according to fiscal data. So, where does this leave Buffett and Berkshire Hathaway? Well, both the man and the company are certainly in it for the long haul, even if Buffett self-admittedly eats like a 6-year-old. Additionally, it seems that Berkshire Hathaway is continuing to increase its investment portfolio. In fact, the company bought an additional 7.9 million shares at a cost of $466 million, which now gives Berkshire Hathaway a 23.1% or $13 billion stake in Occidental Petroleum. But perhaps even more importantly, Buffett not only focuses on building wealth for himself and his company, but also frequently donates significant portions of his positions to charities around the world. True to his form as an investor, he doesn't simply donate money. Instead, he gives equities that can generate ongoing income for these charities, enabling them to flourish and make an even greater impact in their respective communities. His stake in Berkshire is committed to philanthropy, as he said during the 2017 annual meeting.
All of my Berkshire, every single share, will go to philanthropy. So that I don't even regard myself as owning Berkshire, basically. It's committed. And so far, about 40% has already been distributed.
As we come to the end of this deep dive into Warren Buffett's 2023 portfolio, it's clear that his investment strategy is built on finding great companies with strong management, enduring competitive advantage, branding, and buying them at a great price. His success is evident, as demonstrated by Berkshire Hathaway's unparalleled performance over many decades.